Good morning, traders. It's 8 a.m. Chicago time on Thursday, the 5th of November, 2015. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. Gonna zoom through the overnight news. There's quite a bit of it here, but don't want it to occupy too much time. Want to remind you again, the AMA today is scheduled for noon Central, 1 Eastern time. Please have a look at my Twitter feed to get the link for it to register. My Twitter feed is twitter.com/futurestrader71. We'll be covering quite a bit today, statistics included. So I'd like to have you there. Um, as far as the news overnight, real quick chatter again about a December rate hike by the Fed. This is getting so long in the tooth at this point that I would love to see it just happen and for the market to have its correction and for us to just move past it. Wednesday's testimony yesterday by the Fed Reserve Chairwoman Janet Yellen in front of the House Financial Services Committee has the market believing, at least temporarily, there's a better chance than not that the Fed will raise interest rates in December. The Bank of England this morning kept policy on hold just as expected. Bank of Japan is worried about inflation. Inflation target of 2% is expected not to be achieved now until the second half of 2016. So they've pushed back their expectation of when that target is going to be hit. So expect more QE there. Facebook announced yesterday beat earnings and is at all-time highs. Trading in the aftermarket. October Challenger job cuts this morning came in lower, which is better, 50.5 thousand versus 58.9 thousand, caused a little pop. Initial jobless claims came in at 276,000 versus 262, which is slightly worse. Looking ahead at today's calendar, we have a minor release here, EIA Natural Gas at 9:30 Central, expecting 57, and that's pretty much it for what's left on the calendar. We've already had our initial claims and so on. We have, as far as speakers and other events, we've had Fed Speaker Harker and Dudley at 7:30. But we still have Fed Speaker Lockhart, who's an important one, at 12:30 Central, 1:30 Eastern. After the market, we have earnings on News Corp and Disney coming up. Let's take a look at the technical picture here. So let's pull up yesterday's chart. But first of all, I want to show you what we talked about during the Trader Bite yesterday. Here's the video of the Trader Bite from yesterday. This is what we covered, and you could see that the primary hypothesis was for it to potentially test that high it put in the day before, 21.10 quarter, which it did not do so, but the expectation is for it to fall in and stay in the range of the prior day. And as you can see in the chart behind of what happened, what actually happened is pretty much that we did attempt to test up. The test up was weaker than expected. Did not give me an opportunity to catch the short down to 2103, which is the initial target. And then of course to start looking at the LVN and then the prior day's low as targets. The market ended up rotating down, making a lower low to complete this impulsive rotation down. Pushed up to mid. Mid provided an opportunity. We did expect it to continue selling. Mid did not pay out very well, though. There was only a 3-point rotation there before it broke higher. And then it fell back to the mid again, and then it continues again mid and continues again mid and continues. These are some of my favorite days when it trades like this. It's not being affected by too much chatter, and it's kind of following the auction. the way the auction is naturally occurring. Uh, so this is what we set up for yesterday. We ended up putting in a double bottom with the prior day. So if I zoom out here and go to the 15-minute, you will see that the prior day's low right here is at the same price, 2090.50, retest 2090.50. This makes this a weak low, okay, with the point of control right underneath it. The last swing up yesterday, this push up right here to 2100 and the mid was a short, and it really had a very high probability of taking out this 2090.50 at least by a tick. We're looking for a breach there. Did not happen, but that was a pretty high probability play, and the market just was tired at that point, putting in the point of control, shifting the point of control down there, and being stuck there for the session. This is not the correct OS. So the OS was up here. Um, so overall, the market yesterday was completely in balance. So this is a balanced condition yesterday. Just as expected, we expected it to rotate on itself. We expected it to trade within the prior day's range. Did exactly that. A good day. From an auction perspective, it behaved like it should. We're going to extend the microcomposite profile forward. And why didn't that happen? Oh, created a new one instead. Yeah, created a new one instead. But I want to take this. Come on, where are you? Let's get this. Oh man, there it is. All right, let's get this extended forward to 11.4 at the close. Boom. So now when we look at the overall auction, so now I'm looking at this weird zigzaggy line. That is a microcomposite. When we look at that line, we see again that we have an MCLVN right here at 2101. That's this low volume point here. We still have a high volume point at 2106.50. If you recall, that was the target from a couple days ago. Let's get rid of this. Target from a couple of days ago. And we are trading just below it at 2100. So it's important to see this morning what it does as far as a test of that 2101. In fact, it's trading up here. What does it do at 2101? If it's not able to take out 2101 and it falls back in, then we're looking for 2096.75. And if 2096.75 gets taken and we still cannot find buyers and go into zigzag mode, then we're likely to take out that double bottom with a high probability for a push through the 2090.55 and back to the point of control. The point of control, again, if you don't recall or didn't know, the point of control is the highest volume price in this region. And this profile here started way back through the summer, through the balance from the beginning of the year through the summer, and that's where we are. So we've moved from this high volume node way down here at 2088 and pushed through the 2100, 2101, and tested up to 2110 and have come back. As I explained yesterday, the move was a little bit too quick, and the market is essentially having to advertise for lower prices to entice buyers to come back in. As you know, again, it's gotten ahead of itself. If we look at the SPX, the SPX is still following its channel trend here with it's underneath the mid trend line, but overall it looks pretty healthy. The 52-week highs have been peaking out. That's a good thing. The underlying sectors here, again, I'll remind you, the underlying sectors are the consumer discretionaries, industrials, healthcare, financial, and technology, and those make up more than 70%, about 75% of the index, and you could see these are turning up. The financials are sideways, but pretty much everything the strength is really in the technology and in healthcare. These are all pointing upwards. This move up has some pretty good breadth underneath it and is fairly healthy. If we look at the weekly profiles, um, this doesn't look like a weekly. So let's look at the weekly profiles here. So if we look at the weekly profiles, we're on top of last week's profile. This is last week's profile here. We have pushed down into the point of control of the prior week's profile and have rejected it, and we've traded up. We've closed a single print from way back, and we are holding prices up here. We are currently, yesterday we closed at that asterisk right there, and you could see that that's where uh, the meat of the heavy volume is of this particular profile. Overall, again, this is a pretty healthy rally. Again, I'm going to say it. I warned about it a couple weeks ago, and it was when it was brewing. And overall, the trend is strong to the upside. Right now, we're simply resting. The overnight session shows that we are basically in the process of taking back a lot of what we did yesterday. Again, 2100 is the LVN. We traded above it. The overnight profile is very boxy again. Yesterday's was boxy as well. Last night's was boxy. There's just no consensus. There's a wide consensus on what's considered value. There's trading going on across the whole thing. Pretty good volume, 170,000 versus 145,000, which is the most common in the last 20 days. And so overall, the market is auctioning very in a very healthy way as far as the how it's exploring prices and how much participation it's getting in those explorations. The overnight inventory in price is long. Overnight inventory in delta is flat. So what that's telling us is, yes, it's likely to have a responsive selling um, push on the open. The problem is that it looks like the inventory is mainly flat, which means that it's not going to be directional on the open. So on the open, the expectation is for an open auction in range, which means that the market's likely to open and do very tight, small swings before it decides to do what it does. Again, the expectation is we test the 2100. If we cannot take the 2100, then we're looking for 2096.75 for yesterday's point of control, but the key test will be at 2090. That's the primary trading idea. That's all I have for you. So again, I'm going to remind you the AMA is at noon Central, 1 Eastern today. Good luck to you. Watch your risk, and I'll catch you on the webinar. Take care.